Hello, C Squared Collective, and welcome back to the sixth episode in our series, Fall into QuickBooks. Today is all about invoices, sales receipts, and how to record your income. If this is your first time joining us, welcome. Each episode is designed to stand on its own and give you practical tips on the main topic. But if you would like to explore more, check out the rest of the series linked in the description below. Just like the seasons, QuickBooks Online has been changing. Some of these updates have been slowly rolling out over summer, but according to QuickBooks Online, all users should be migrated over to the new interface and banking features as of now. We know that change, especially in technology, can feel very overwhelming. This is why this series has been created to help you set aside stress and confidently step into smart financial habits with QuickBooks Online. Each week, we share a clear step-by-step tutorial on the new interface so you can get the most out of your tools. Just a bit of a disclaimer, keep in mind that QuickBooks Online may continue to make changes as feedback is received, and additionally, different QuickBooks Online subscriptions come with different features, so our dashboards may have things that you don't, or you may have things that our dashboard doesn't. Even so, the series will give you helpful tips no matter which version you are using. As always, if you have questions, make sure to drop them in the comments below, or you can reach out directly to us at connect@c2accounting.net to schedule one-on-one support. So grab your beverage. Today I have an eggnog latte. I'm very excited for it, and let's get started. Entering income is very important because it helps you see true profitability, ensures accurate reporting, and keeps your bank reconciliations clean as well as your taxes. Today, we are going to go more in depth on different ways to enter income and explore some workflow options. Next week, we will go over how to deposit the money that you have received correctly, so make sure to subscribe and come on back. Before we get started, it is time for another term check-in so that we are aligned with the various terms for receiving money. Money coming in is not always revenue, so we want to make sure that we know all the different ways to have money coming into your bank account. Firstly, a deposit is when you receive money in your bank. This could be a payment or a collection of multiple payments. A transfer is when you are moving money between accounts, like from your business checking to business savings. It could be a deposit in your savings. A return is when you've purchased something from a store and later returned some or all of it and get a refund. A loan is when you receive funds that a loan precedes. A contribution is when you deposit money into your bank business account from your personal account. Products and services are the terms that QuickBooks Online uses for items that you sell and a list on an invoice or sales receipt. Income is payment that you receive for your products and services. And a sales receipt is a term that QuickBooks Online uses when the sale and payments happen at the same time for your customer. For example, a retail transaction or a membership fee that is paid immediately. An invoice is a request for payment from your customer, usually within a due date to be paid later. Before we talk about the three different methods for recording revenue, let's first talk a bit about setup. The chart of accounts is your list of categories that you use to assign transactions in QuickBooks. Name is where the category name will appear on a report. Type is a broad definition of what the category is, such as income, cost of goods sold, expenses, assets, liability, and equity. Today, we are just talking about the income account, which are made up of various income categories that you may have on your chart of accounts, or a COA, as some accountants call it. These are both on your COA and displayed on your profit and loss statement, which can include service income, product income, etc. You can have one or multiple account types with different names. QuickBooks will give you a few default income accounts like sales or sales of products. However, you can also add your own custom income accounts for how you would like to see revenue on your profit and loss statement. If you only have one stream of income, such as general construction income or consulting income, one sales category may be perfectly fine. If you perform a service and sell products, or if you receive tips, so for example, a hairdresser, it may be helpful to have separate categories for each of those. A restaurant may want separate food sales from alcohol sales, or you may want an income account directly for discounts or refunds given to your customers, since this directly impacts income rather than being a business expense. I could go on listing suggestions, as this varies drastically from business to business, so let us know if you want us to go in more detail in a separate video. The biggest takeaway here is that income accounts on your chart of accounts and are the names that go on your P&L. Now, let's talk about products and services. These are the items being sold and listed on both sales receipts and invoices. You may want to itemize these out, such as adding burgers and hot dogs, or monthly counseling and an intro session to counseling. This can be useful for tracking how much of each product and service you sold, accounting for inventory. It allows you to easily track the different prices per item or service sold, or simply to just have the detail for the client. However, each product and service you add is mapped to an income account on your profit and loss statement. Following our examples, both burgers and hot dogs would go on a food sales income, where both monthly counseling and an intro to counseling session would go on counseling income. For example, let's say we're a hairdresser and we had someone who got a haircut, a hair color, shampoo, and purchased conditioner. So they purchased 2 products and they got 2 services done. So the haircut and hair color would both be mapped to a service income for a service income total of $150, where the 2 products purchased, the shampoo and conditioner, would be mapped to a retail of product sales for $40. So the subtotal for the customer would be $190. However, your service revenue is split up separately from your product revenue. We are happy to work with you to develop the best setup for your business, and let us know in the comment section if you want a video on the setup for either the chart of accounts or your products and services. There are 3 different main ways to record your received revenue. Please note that we are specifically talking about sales that your business makes, not about loans, transfers, refunds, or contributions today. Option 1 is in the bank transactions. Option 2 is sales receipts. And option 3 is an invoice and a payment. If we navigate to our bank transaction page by selecting Accounting and Bank Transactions, you see all of the transactions that have hit the bank. For our income coming in, if you are sure that the transaction is all revenue, you can add a customer and a category/income account. This automatically enters the transactions as what QBO calls a deposit type transaction. If you click into the transaction, you can see a couple more options, but for deposits, it will always be a customer and a category. If you need to split it, so for example, 2 customers paid, you can select the split button down at the bottom, and in the same way, enter the customer, or customers in our case, the different sales category income accounts, and the amount, just making sure it totals the deposit total. If you enter something in the products or services, QBO will auto change it to a sales receipt instead, so be careful. This is the simplest option and a great one if you have only one sales revenue account. However, it is very easy to record other income such as loans, contributions, and refunds by accident, so be very careful. QBO did just add the ability to see these deposits on a customer page. Do note that if you record income in this way, it will not show up on the sales by customer report. You will need to do an invoice or sales receipt to get that. Now let's dive into sales receipt. Remember that a sales receipt is the term that QBO uses when a sale and the payment happen at the same time for your customer. For example, a retail transaction is paid immediately. Here, you will be putting a customer and a product/service or multiple, and those are what is mapped to our income account. So remember, our burgers and our hot dogs are both mapped to your food income account. So now let's go over a few different workflow options for creating them. The first option is also in the bank transactions. QuickBooks now creates sales receipts for income directly in your bank transaction. So this is a newer feature. This is a quick way to record sales receipt. Just navigate to your bank transaction section under accounting, find the transaction that you are trying to create a sales receipt for, record the customer, and here's the double check. You want to make sure it's the product and service, and post. You do need to change the type to sales receipt and use the product and service area. So you will not be entering an account here. Option 2 is to hit the plus create button and click sales receipt. Select the customer, choose the payment method. So for example, if they handed you cash, paid by check or by credit card or through an ACH. Quick note, if you do want to process payments via credit card or ACH through QuickBooks Online, you will need to apply for a merchant service account through QBO. If you want to enter a reference number, so this is a great place to put a check number, confirm the correct payment date, and then choose the deposit to account. If it will come through your bank in a few days and you're positive that this sales receipt is going to come through by itself, select that bank account. If it will come through as part of a batch deposit or you're not sure when or where, a great place to put it is undeposited funds or payments to deposit in some QuickBooks versions. This acts as a holding tank for undeposited funds, which we will cover in more detail on the next video. Here you add your products and services, split the lines if needed, and add any descriptions that you may want to include. Enter quantity, rate, and confirm the total amount. Review sales tax if it's applicable and the total. Feel free to add any messages or attachments, and then save or save and send if you have an email and would like to share with your client. Option 3 is in the Sales and Get Paid app. So navigate to that app and click Sales Transactions, and then click the New Transaction button in the top right and select Sales Receipt. This opens the same exact screen we just filled out, and you can fill out in the exact same way. The fourth option is to go to the Customer Hub. So navigate to the Customer Hub app and select Customers. Pull up the customer you would like to create the sales receipt for, and you can either click New Transaction in the top right corner to create a new sales receipt, or click the down arrow next to a previous one and choose Copy. To make a sales receipt reoccurring, so for example, a membership that maybe someone pays every month, click Make Reoccurring at the bottom of any open sales receipt. You can name your template, and there's 3 different types of options for any reoccurring template. There's scheduled, which happens automatically on a set date. Enter how many days in advance you want QuickBooks to create it. I usually choose about 1 to 3 days. There's the reminder type. QuickBooks won't create a transaction for this one, but will remind you when it's coming up. And the unscheduled type. This sits in your recurring transactions list until you manually use it. For scheduled and reminder types, you can set the interval for how often the transaction occurs. To review or edit recurring transactions, click on the settings gear icon in the top right of any normal page and click recurring transactions under lists. You can also view, edit, or add new recurring transactions for specific customers, like sales receipts or invoices, by clicking their recurring transactions at the client mid-bar. Creating an invoice is very similar with a couple different workflow options. Remember, sales receipts are for when the sale and payment happens together, while invoices are for when a sale happens first and the payment comes at some point in the future. Note that you cannot create an invoice from the bank transaction screen. So our first option is to click the plus create button and select invoice. Select the customer and make sure that the correct email is listed if you would like to include that. Enter the invoice number or let QuickBooks populate one, the terms, the invoice date, and the due date. Add any products or services for this invoice, splitting as needed. You can add your descriptions. They auto-populate if you set them up that way under products and services. Enter the quantity, rate, and confirm total amount. Check any sales tax if applicable and confirm your total. You can activate payments through QuickBooks if you want to accept credit card or ACH payments from your customers in that way. Just review all of their options and their fees carefully. Down here at the bottom, you can add any messages, notes for the customer, any internal notes for your company, or add any attachments. You can also print or download the invoice, or click the review and send to email it directly to your customer, or save and close if you're just entering it for yourself. Quick note, we have been in the Edit tab at the top. You can preview how QuickBooks displays the invoice to customer by viewing the email view, payer view, or PDF view. I will show you how to edit invoice templates in just a moment here. Option 2, to create a new invoice, you can go to Sales and Get Paid, to Sales Transactions, and then in the top right corner, select New Transaction and Invoice, and then you just follow all of the same steps we went over. Option 3 is to go again to the Sales and Get Paid tab, Invoices, and then here you can select New Transaction and Invoice. Option 4 is to go to the Customer Hub and Customers. Here you can select your customer that you are creating an invoice for, and either click New Transaction and Invoice, or click the down arrow next to a previous invoice and select Copy, changing the date as needed. You can also create recurring invoices using the same process as sales receipts. Let's quickly go over how to customize your invoices before we discuss receiving payment and looking at outstanding invoices. Open any invoice using the methods that we just discussed above. Click the gear in the right corner or the Manage area. Here you can adjust the customization, adjust how you receive the payment and payment options, choose your design templates, and scheduling for this specific invoice. If you would like to edit your default settings for invoices and sales, you can click Edit Default Settings, which will take you to Sales Settings. You can also access this from the main settings gear, Account and Settings, and select Sales. To change the visual design, you can open any invoice and select the pre-made template. If you want to create any new templates, select Add/Edit, which will take you to custom forms and styles. You can access this also from the main settings and custom form styles. Here, you can put your company branding on your invoices. You can choose from the layout templates that QuickBooks has available, upload your logo, edit any colors and fonts to match your branding, print a sample to see how customers will view it, adjust what information appears on invoices, edit email notification designs and the verbiage for email notifications. This was just a super brief overview, so let us know if you would like a more in-depth walkthrough on how to use these tools to enhance your invoicing. Now, let's talk a bit about recording invoice payments. If your customers pay you through QuickBooks, it will automatically record the payment for you and show a match option in your bank transactions. If a payment comes through your bank that matches an invoice exactly, QuickBooks will show you potential invoice matches. But be careful, as QuickBooks doesn't always know which invoice was actually paid and makes their best guess based on date and the amount. The best practice here is to mark invoices paid when they are paid, and then match them when they come through the bank. This also helps you track outstanding invoices accurately. There are a couple different ways to mark invoices as paid. You can navigate to the invoice via Sales and Get Paid, Sales Transaction, or Invoices, or through the Customer Hub, which we just went over. Select your invoice and click Receive Payment either on the main page or within the top right area of the invoice itself. Or you can alternatively click plus Create and Receive Payment. Then select the customer and QuickBooks will pull up all unpaid invoices for that customer. Here in the Receive Payment screen, confirm that Record Payment is selected. Note, Charge New Payment may also be an option if you have the merchant services set up through QuickBooks Online. Here you can enter a payment date, a payment method such as check, ACH, cash, etc., and a reference number, which is a great place to record check numbers. Most importantly, confirm the deposit to account. Just like in sales receipts, if the payment will come through by itself for the exact amount, deposit it to the correct checking account. If several checks are deposited together, there's fees deducted, or you're unsure of when it's going to clear, deposit it to undeposited funds or payments to deposit in some QuickBooks versions. Select which invoices this payment covers. You can record one payment for multiple invoices if that is what actually happened, partial payments if they only paid a portion of it, or overpayments, and it will automatically credit their customer account. Adjust payment amounts per invoice as needed, but just remember to record what actually happened. If the customer overpays, QuickBooks will automatically create a credit for that customer. Now let's move on to managing your invoices. To review or manage invoices, navigate to Sales and Get Paid and select Invoices. Here you can see which invoices are overdue or not due yet, and which payments have been deposited or are still undeposited. You can also go to a customer page to view what invoices or payments that a customer still has outstanding. Additionally, you can view outstanding invoices on the Accounts Receivable report by navigating to Reports, Standard Reports, and Accounts Receivable Aging Detail. That concludes our overlook on income. Now you have all of the basics to use these features to your advantage. If you would like a little bit more information on any of the topics we covered in this video, please let us know in the comment section below or reach out to us to schedule one-on-one support that is for your business. Next, we'll be diving into how to record the deposits of all of our income. Make sure to subscribe and come back. Leave a like if this was helpful for you. If you have any questions or have an area of the apps that you want us to explore in this series, please comment down below so that we can help you out. If you want to see more content like this, consider checking out our other socials. I've included those links and the links to our website in the description. Thank you so much for watching. Don't forget, keep learning so that you can be rooted in wisdom and grow with care.